following content is a technical analysis on 3 stocks that I am closely monitoring, and I am confident that at least 1 or 2 out of the 3 of them will experience downward pressure, presenting tradable opportunities. Well, I will begin with, I guess what you would call the least favorite, in ticker symbol CXM, Sprinkler Incorporated, a company of the technology sector and software application. We're followed by ticker symbol CPRT and ticker symbol ASML, which I have a lot more higher inclination towards due to specific key levels and targets that I'm serving. Again, just high volume at risk at price volume profiles on key inflection points, as is when we take away the lines here right off the 50 exponential and 50-day moving average. Gives me that head and shoulder looking feel here with an outer layer of a left shoulder head up with a right shoulder, which is the basis for a neckline. And then, of course, my favorite is watching negative and bearish divergences that construct on multiple indicators, and specifically if they are aligned and synchronized amongst all 3 technical momentum indicators, with already red candle close, 0 line hills forming right below the oscillator histogram here. That is just my go-to as far as finding some key technically induced trades without any fundamental catalysts behind, whereas I am watching where the charts manufacture the headlines before they happen. But again, these key levels in the snap, I like to see a nice, clean, solid daily candle, solid close print below this key inflection point, coinciding with the neckline off that head and shoulder, and nice volume at price gap in between here. And these would be my identifiable targets, whereas that first target down to 1293 price support for a 1.86% drop. And if we have a snapback and or counter churn rally amongst bull traders and or long traders, then a nice clean objective entry, if not add on to your existing position, for a 4.4% drop down to the 382 fibs retracement, which is 1206 price support for a 10.8% crash, down to the 50% fibs retracement, call it 1128 price support for a 17% crash. And if things get really bad there on an overshoot, on a complete retest, on a backfill of the gap, down to retest that 200-day moving average as well to the 618 fibs retracement, call it 1022 price support for a 25% crash. And that is a dual line of support there. So just one that I really like here. Again, technical minimum indicators testing their 0 line thresholds as of now. So again, just a massive key inflection point that I really like to hone in on there. Take you to the next stock here. Here off the daily interval, once again, Copart Incorporation, a company of the industrial sector and business services, whereas the Dow Jones was down 400 points today. Nice, clean, big divergent high, negative and bearish divergences really formed and constructed amongst all 3 technical momentum indicators, with the first red candle close below the oscillator histogram there. And we have a confirmed potential crossover there, already a confirmed crossover on the moving average convergence and oscillator on a potential revisit to its 0 line thresholds there. And what I really like about this stock is the 86.15 price support there. Nice volume at price profile gap there, whereas you have the 50-day moving average hovering on up above there, honing in. And if we snap that level, if we take out that dual line of resistance, we got this big old air pocket here. I'll zoom out on the weekly interval here, and that's a big drop, honing in on the daily interval there, where I'll take these key levels here. And again, if we have that snapback and or counter trend rally once again, whereas I like to see that an add-on to your existing position, or you're filing in for your entry, objective entry short, down to 86.15 for a 4.6% drop. When we snap that, I would only expect a big wave of selling, forced liquidations, forced stops to go off for a big move down to 79.15, which will coincide with this primary uptrend line off of the September 2022 reactionary lows. Just a big support there, coinciding with the 79.15 for a 12.5% crash. I would only suspect some sort of counter trend bounce, snapback rally. Could even be a potential dead cat bounce before initially and finally taking out that primary uptrend line. But just I really like this primary uptrend line. Just a plethora of reactionary lows really across the board there. And I would only suspect some sort of significant reactionary candle print amongst that key level. I'll take you out real quickly to the last and final stock in ASML Holdings, a company of the technology sector in semiconductor equipment and materials. And if we have the semiconductor sector starting to take some heat, the equipment materials and the raw materials of this company should ensue a pretty move to the downside. And here we are, primary reactionary low right off the October 2022 crash there. We have a nice clean divergent high, mainly on the daily interval, but I want to zoom you out to this primary reactionary downtrend line of the September 2021 reactionary highs, with a multitude of reactionary highs now, where we've been rejected very impulsively from that key inflection point. And again, just almost which could be honing in on tomorrow, if we especially if we take that previous low out, would be a nice bearish engulfing candlestick print pattern. And what I see here is off the daily, nice, clean, pretty great, well-defined head and shoulder top, with the 50 exponential moving average being tested and the 50-day moving average being back tested today. And that is a pretty big, significant level right at that 731 price support. Whereas I would only suspect a big move to the downside if broken for another 4.8% drop on a complete backfill of the gap, down to 644.76 for a 9% crash. And if we have a nice, clean bull traders and or long traders defend this key inflection point called dual line of support there, right back up to that primary reactionary high downtrend line for another 3.6% in a nice fighting off the ropes rally there, that would apply an additional objective entry short, if not add on to your position once again, for a scaling in process, down to 671.09 for an 8.7% crash, and then ultimately 644 for a 12.5% crash. So we'll see what happens. I'll keep you updated if I see any more significance in the charts. Nice, clean, bearish rising wedge pattern with a big divergent high, negative and bearish divergences really constructed amongst all three technical momentum indicators with almost equal highs, putting in those exaggerated negative divergences amongst all three near-term technical momentum indicators, with already a nice, clean red candle prints below the zero line of the oscillator histogram. We'll see what happens. I'll keep you updated if I see any more significance amongst all three of these stocks.